Hey, I'm Jason, and this is Supply and Demand Daily, where I tell you what we learned about the economy today. Let's go ahead and get started. The data that I have for you today is residential construction permits, which were down in April. I also have residential construction starts and construction completions. And then I want to leave with a quick note on export bans. There's been some bans instituted on the exportation of palm oil and wheat by a couple of systemically important countries in South Asia. So I'm going to get out of the way so we can look at some charts, and we'll go ahead and get started. So the first thing is housing construction permits. So before a house is built, it has to be permitted by the local municipality. And this is a number that is released by the Census Bureau that tracks exactly that. This is the total number of permits. So both single family and multifamily. Multifamily meaning things like quadplexes and triplexes and apartment buildings, and then single family meaning standalone houses. And this chart goes from April of 2019 to the current month. So we dropped by about negative 2.8%, or we dropped by 2.8%, which is not huge. And as you can see, this number has been highly elevated over the last couple of years, but we're going to get into some more details that show what's under the hood here. So the next numbers that I have for you are broken out between single family and multifamily, and this shows the construction starts in multi and single family housing. So the green line is single family, that's standalone houses, and the blue line is multifamily, that's quadplexes, quinplexes, and apartments and stuff like that. So these two figures actually moved in the opposite direction in April. We had an 8.3% drop in April in the single family sector, and then we had multifamily going up by 6.6%. So again, doing pretty much the exact opposite there. And you might ask why the multifamily line is so far below the single family line. Well, the reason for that is because one multifamily construction start is equivalent to however many housing units are actually within the building. So even if it's an apartment building that's going to have 20 different apartments, that would still be considered one residential construction start under the multifamily category. Okay, so moving on from there, the completion gap, which is the difference between homes started or housing units started and housing units completed, is still pretty wide, and it went up quite a bit over the last 2 years with the boom in single-family housing units and demand that we saw. So there was a lot of credit dumped into the housing market to try to fight the COVID-19 pandemic by the Federal Reserve. Without getting too far into that, this gap was highly elevated. And it came down a little bit in the month of April, and we're going to check and sort of break that out between single family and multifamily to see how different these two markets are operating now. And so I have that right here. So the rate of starts in single family, as I already mentioned, went down by 8.6%, but completions in this area of the housing market went up by 29%. So this gap for single family has actually completely closed altogether. And I said last month when I was reporting on this data, I don't think it was in a video, I think it was just in a daily note that I posted, but this would be, I said that this would be a solid indicator that home prices are about to see a pretty significant correction, because as soon as that supply shortage starts to alleviate, there are all of these homes for which construction has been started in the last couple of years, and like we saw in 2009, 2010, and 11, these construction projects that were started do come to completion once the materials start to get cheaper, and then that really opens up the supply, which changes the whole sort of paradigm of what's going on in the housing market, and then prices start to come down because there are more available and there's less demand. So you have it from both sides. You have negative pressures on prices from both sides. And then just some thoughts about why this may have happened, why builders were able to complete so many homes in the last month. Well, we saw a pretty significant drop in lumber prices. So one of the main reasons why it's been so difficult for builders to complete these houses is that lumber has absolutely skyrocketed. It broke above $1,500 per 1,000 board feet back in mid-2021, and it's finally come down from the levels it was sitting at in early 2022 and late 2021 to kind of a more reasonable level. Still highly elevated, but since that high in mid-2021, done, it's basically been cut in half. And so there's definitely more lumber available, and it's easier to get for these builders who are completing these projects. Now, what these data say when you put them all together, at least what it looks like to me, is that resources in the residential building industry are starting to leave the single family sector. They're starting to complete these homes and then pull out investment in the single family sector in favor of moving resources and investment into the multifamily sector. And that's why in the intro to this video it mentions that there is a silver lining, because ultimately what that means is the more that we see construction in the multifamily sector, apartments are going to start to come down in price. And as we already know from the higher mortgage rates and the lesser amount of liquidity that's going into the housing market right now, this single family housing market, demand is going to drop for those types of properties, and so we'll see lower prices there as well. So even though this kind of spells doom for home prices on a social value sort of level, the supply of housing opening up and then the costs of that housing starting to come down, these are actually good signals that we're starting to see. And then, so moving on to the soft commodities, we're talking about some major food commodities that are coming under a lot of pressure and have for the last couple of years. Wheat, especially sensitive to the war in Ukraine. That's the white line here. By the way, both of these lines are priced in Indian rupee. And the reason for that is because the countries that we're talking about are India and Indonesia. Those are the two countries that have decided to ban wheat and palm oil exports respectively. But these prices have gone up quite a lot. So in the last couple years, palm oil has gone up by 208%, and wheat is up by 144%, with about half of that increase coming from the Russia-Ukraine spat alone. Maybe I'm sort of minimizing it by calling it a spat, but the Russian invasion of Ukraine has certainly pushed up wheat prices they doubled between 2020 and 2022, but then they sort of doubled again, or almost doubled again between, just in the last couple of months. And so the orange line, again, is the palm oil, and the unit for that is 25 metric tons, but that's the price of palm oil per 25 metric tons in Indian rupee. And then the white line is the price of wheat in Indian rupee per bushel. And so what are the political responses that I alluded to? Well, Indonesia has recently banned the export of palm oil as of the end of April, I believe. April 28th is when it went into effect. And so now we're seeing protests by Indonesian farmers who would like to sell their palm oil on the international market and make some income off of those elevated prices, but they cannot. So we have a lot of social turmoil. Inflation of all kinds causes social turmoil of all kinds in general, especially in countries where the income level is closer and closer to the subsistence level. And then in India, they recently announced that they would be banning the export of wheat because prices in that commodity have gone up quite a bit. And so the stated goal that they mentioned that they were going to do this with was to manage the food security of the country there. So they believe that by cutting off exports, they will be able essentially to make sure that their citizens have the first crack at the wheat that is in supply or that is available to the country as a whole. So that's all I have for you today. Again, it was a housing data bloodbath, but with a silver lining, because ultimately the signals that we are seeing means that housing is going to get cheaper in both multifamily and single family realms in both of those two markets. And then I wanted to point out the export ban situation in case you go to the store in a couple months and are very surprised that some of the products derived from these commodities start to get even more expensive than they've already gotten in the last couple of years. So that's all I have for you today. I hope you'll join me tomorrow for Supply and Demand Daily. That's May 19th, a Thursday, my favorite day of the week. And with that, I hope you have a good rest of your day, and I'll catch you later. Thanks.